three main topics I want to cover in this webinar, and that's insider bar, pyramiding, and then some more support and resistance in general. So before we head into insider bar patterns, I want to talk a bit about pyramiding. Pyramiding is like scaling in on your trades. So in the first webinar, we talked about the two-bar reversal and how it happens at the beginning of a trend, right? So here would be looking for buy opportunity, here sell opportunity. But what pyramiding is basically adding to your positions on a continuation so that you take advantage of this entire move, right? Because it doesn't help you to just enter once here, enter one trade here, and then get out. You get into this one trade, you hold, and then you want to add to this movement so that you make money on the entire trend, right? So instead of focusing on 7 different positions in 7 different accounts, it's best for you to focus on really, really high, good opportunities like this one and to capitalize on it than trading 7 different pairs, and then it causes you headaches, right? And another good thing about pyramiding is that it's also low in risk. You don't want to be like certain traders we see here in South Africa where they will enter 5 positions here and then lose them all. You always want to stick within your risk management, but you also still want to make more money by risking less and take advantage of this entire move. So now onto the insider bar. It's not, first of all, it's not wise to use the insider bar as a trend reversal. So in the previous webinar, we talked about using the two-bar reversal for the reversal of the trend. That's fine. But you don't use the insider bar for a trend reversal. You use it as a continuation pattern. It shows you that prices in the short term, there might be a change in trend, but generally you want to add to your existing positions before a big move happens for a more short-term trend. So what the insider bar does, it shows a rejection of the previous candle. So before we head into it, the insider bar is always smaller than the outsider bar, right? The bigger bar, the insider bar is always smaller than the outsider bar. And what it shows is some rejection of the previous candle, and it shows some consolidation or some indecision of the markets. So let's head into it. So remember what we said, we're looking for insider bars so we can add to our winning positions. So say we've added a position here at the two-bar reversal, right? And I've just put the arrow here to show you we've added a position here. And if we're looking for two-bar reversal, like I said, it would be this one big candle here. Look at this bullish candle here and how it completely engulfs the next red candle. So essentially we'd be looking for to add a sell position, right? That was at our entry, say we entered there. So say we entered here, right? So let me just remove our entry so we don't get confused. Price starts to move down, price starts to move down, price starts to move down, up a bit, up a bit. Can you see this is choppy markets? But where it becomes clear is here. So we've already entered, we've broken even, you've brought your stop loss to break even, right? And then somehow we see this huge spike, this huge bullish candle here. And that's not the entry. The entry is here where we start to see price being engulfed. This red candle here is smaller than this bullish candle here. And essentially that signals to us a reversal, right? So we add into our position, right? Same thing applies here. Let me just show you. Same thing applies with this candle here. With this candle here. This is the outer candle. This is the insider candle. Remember, the outer candle swallows completely the next candle, and then it's a continuation of the downtrend. So remember, the reversal bar is basically a continuation pattern. It continues the trend we've already seen. This is the beginning of the trend. We are adding to continue the trend we've already seen. So we continue the trend, we continue the trend. Price goes up again as it usually does. And then we see another reversal right here. So here's where we want to see price reverse again, and then inside a bar candle pattern. So remember, we're continuing the trend we've already seen. So again, this bar is swallowed up completely by this bullish bar here. It's engulfed by this bullish candle here. And then price continues as it's been going, it continues. And then let me remove this. Again, a continuation of the bar. So this is the bullish candle here, completely swallows this candle here. And then the continuation carries on and it carries on. Now, if you don't want to use that, there's always the Fibonacci tool for people who are, it's the same thing essentially, whether you want to use Fibonacci or you want to use reversal, it really is just the exact same thing. Let me see. As you can see, here's a 618 reversal right here. So whether you were trading inside a bar or you're trading Fibonacci, you still would have been adding a position there. Same here, it would have been a 3-8 reversal. Same here, a 3-8 reversal. You still would have been adding a position. And then if we went lower with the Fibonacci tool, say we came here, this wouldn't be a clear trend. Let's see if we brought it down a bit. So you can use the 2-bar reversal with the Fibonacci pattern, right? So this would have been a 618 reversal again, right? 618 Fibonacci retrace. So you can use the insider bar with the Fibonacci in order to add to your positions. So just to consolidate everything, remember the insider bar is not a trend reversal. It's a continuation. It's meant to help you add to your position. So this was your winning entry, right? At the reversal of the trend. Here was when you want to add. Here's when you want to add. Here's when you want to add. Here's when you want to add. So essentially, what the insider bar pattern shows is a continuation of the downtrend we're already seeing here. So at these points here, we're just looking to add to our position, and we're looking for a continuation pattern to just basically capitalize on this one movement. That's what the insider bar helps us with. So you can't use the insider bar to show a trend reversal, and you can't use it in isolation. So don't try to trade the insider bar as a strategy on its own, and use it more as a short-term consolidation. Think of it as a way of price is sort of waiting, consolidating, the market's consolidating, it's trying to reverse, but struggles to, and then in the end, price just topples. So something also important that I've always heard Dr. David Paul say, and you'll hear me mention a lot of his work because I think he's absolutely brilliant. He's always said that he uses the 8 moving average on the 4-hour chart as an indicator of price being in a downtrend. And what you'll see essentially is that throughout all this move, we've seen price remain below the 89 moving average. And that's just important to note.